Today in this video, I'm going to talk about something called backdoor Roth IRA. Now, this is a tax loophole that savvy investors use to minimize their taxes and save tens and even hundreds of thousands of dollars over the period of years. To understand what is this and how it exactly works, first you need to understand the differences between traditional IRA and Roth IRA. Now, Roth IRA is an account which allows taxpayers to set aside certain amount of the money from their annual earnings towards a retirement saving account. All the money is contributed after tax dollars, meaning that funds are earnings that have already taxed in the year which are they contributed to the Roth IRA. Now, a traditional IRA is funded with pre-tax dollars, so it serves to reduce your current tax contribution by deducting the amount from your total income. This means that your money will grow tax-free in Roth IRA versus a traditional IRA where you have to pay your taxes according to the tax bracket that you are in at the time of your withdrawals. So, Roth IRA is especially beneficial for individuals who can expect to be in a higher tax bracket when they get older. This is because you don't have to pay any taxes over the funds once you withdraw them. Now let me give you a simple example. Let's say you as an individual make $100,000 a year at the age of 30. Your income tax bracket is 24%. So basically you pay 24% on your income, that is about $95,375, and then you pay less taxes on remaining income. So after tax, you'll be left with $82,600, paying $17,400 in tax, and this includes state tax as they differ between states. Now you can fund your Roth IRA with $6,500, which is the contribution limit for 2023, and basically this investment can be put towards stock providing dividends or anything. But for traditional IRA, you would fund your account with $6,500 before any of the tax deduction, so no taxes are paid at this point. So as you can see, Roth IRA is a great way to save retirement and minimize your tax burden. So basically, Roth IRA is a retirement account which allows you to contribute after the tax money, which means that you contribute money that has been already taxed. So when you withdraw your funds, you don't need to pay taxes on your earnings. So for example, let me give an example. Let's say if you have a taxable income of $93,500, you can contribute up to $6,500 to Roth IRA, reducing your tax obligations by almost $2,000. And if you are over age of 50, then you can get additional $1,000 catch-up bonus for a total of $7,500. But what if your income is higher? Well, this is where the backdoor Roth IRA comes in. With a traditional IRA, you can contribute pre-tax money, which means you don't have to pay taxes on your contributions when you make them. But with the backdoor Roth IRA, you can contribute after tax money, which means you don't have to pay taxes on your earnings when you withdraw them. And there are also major benefits to Roth IRA, especially when it comes down to dividend income. Any dividend income you receive, whether it's qualified or non-qualified, is tax-free. So if you are thinking about investing in retirement account, Roth IRA is definitely worth looking into. Speaking about benefits of the backdoor Roth IRA, using backdoor Roth IRA can be a great way to make contribution to Roth IRA if you have higher income and you are ineligible to make contribution to traditional IRA. So how do you create a backdoor Roth IRA? Well, it's not an actual account, but it's rather a method that allows you to make indirect contribution to Roth IRA by first funding a traditional IRA account, then immediately converting into a Roth IRA. And there are several ways to do this depending on where you hold your retirement accounts. One way is a rollover, where you personally take distribution from your traditional IRA in the form you check and deposit that money in your Roth account. It's important to note that you have only 60 days to do this, or you risk facing the taxes and penalties on the distributions. Well, a better way to do is trustee to trustee transfer, in which you direct a financial institution that holds your traditional IRA to transfer your money to Roth account. Now, if it's at another financial institution, this method avoids the risk of rollover, which is much simpler to report on your tax returns. And finally, there is a same trustee transfer, in which you tell your financial institution that holds your traditional IRA to transfer your money into Roth account that is at the same institution. This method also simple, avoids risk of the rollover. However, it's important to note that the contribution you make to traditional IRA account must be after tax dollars, the opposite of what you would normally do when you contribute to the traditional IRA. It is also important to immediately do the transfer as you risk paying taxes on any earnings that you accumulate between the contribution and the conversion. Now, what is the backdoor Roth conversion? It's the process of converting your traditional IRA into Roth IRA. This conversion is very important because it allows you to avoid paying taxes on any earnings that your IRA has accumulated over the time. Now, why you should do this conversion? Well, it's very important to remember that when you contribute to the traditional IRA, the money you contribute after tax dollars, by converting the traditional IRA into Roth IRA, you're essentially taking advantage of the tax-free growth and withdrawals in the future. And the best part is you can do this conversion every year. However, one thing to note though, there are some potential downsides, some potential penalties doing this. You know what? Backdoor to Roth IRA conversion. For example, if you have pre-tax IRAs, you may have to pay taxes on a portion of your conversions due to pro rata rule. The pro rata rule states that you cannot withdraw or convert only the after-tax dollars and avoid paying taxes on them. Instead, you must withdraw or convert proportional amount of the both pre-tax and after-tax dollars based on the ratio of after-tax and pre-tax balances across your IRAs. So in conclusion, backdoor Roth IRA conversion is a very important move. Make this move if you want to avoid paying taxes on your earnings. But just remember, there are potential downside and penalties, so you should always consult a financial advisor before making any decisions. Now, granted that backdoor Roth IRA conversion allows you high-income earners to save money on their tax obligations by creating a loophole where they can indirectly contribute to a Roth IRA. Now, if your income is within allowable limit, you don't need to do this because you can directly contribute to your Roth IRA. However, if your income is too high for a regular Roth IRA, then here is how the backdoor Roth IRA conversion works. First of all, you contribute after tax dollars to traditional IRA. That means you'll pay taxes now to the money you contribute. Then you convert the traditional IRA to the Roth IRA with the backdoor Roth IRA conversion. Then you don't have to pay taxes on the money that you converted. However, you do have to apply pro rata rule. This means that you'll have to take out 20% of your after tax dollars as well as 80% of the pre-tax dollars, and you'll owe taxes on the pre-tax dollars at your marginal tax rate. And the pro rata rule applies to all non-IRAs including traditional IRAs, SEP IRA and simple IRA. You'll need to add up all of the after-tax and pre-tax balances across all these accounts and use total amount to calculate your pro rata percentage. The pro rata rule doesn't apply to Roth IRAs, inherited IRAs or employer-sponsored plans. Secondly, if you withdraw or convert your funds within 5 years of the conversion, you may have to pay 10% of the penalty on the amount of the withdrawn unless you meet certain exceptions. Lastly, if you make a mistake filing your contribution or conversions, or if you missed a deadline for the conversion, then you may face additional taxes and penalties from IRS. So that's how the backdoor Roth IRA conversion simply works. It's important to weigh the pros and cons doing the backdoor Roth IRA conversion, and I highly suggest you consult tax professional if you have any questions or concerns. I hope you found this video helpful. Make sure to hit that like, share this video, subscribe to our channel, and this is Kedar from How to Guys. See you in the next video.